Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Bernoulli. Today is Monday, July 24th in North America and Tuesday, July 25th in Asia, where I am today. We have Judd Hirschberg back on the program show. Judd is president at White Wave Trading, a trading company. He's run proprietary trading groups and has over 45 years of trading experience. He's developed some awesome indicators and a repeatable process-based approach for trading the financial markets. Prior podcasts with Judd have focused on his approach and methodology, and also we've done updates on the financial markets. And that's what we'll do today. We'll like to understand what Judd is currently seeing in the financial markets across asset classes and jurisdictions. Welcome, Judd.
Thank you, Richard. It's always a pleasure. So
Cool.
We've had great
Yeah.
podcast. It's just been fabulous
Yeah.
and timely.
Yeah, thanks. And so maybe we can begin today with a view on like the interest rates, bonds, as a key driver, right, of the other asset classes. If you wanted to go over some of the charts that you've put together.
Okay. So let's just kind of reflect back here. This is a chart. When we first put this up, we had a podcast in September 22. This is the half of the life of 30-year bond futures. And at the same time, it matched the 618 of the Plaza Accord, all-time low where I got out of my short pounds at 103.65 in the 80s, early 80s, half of the life of yen futures. You had alignments in the interest rates, that matched 3,500 in the S&Ps. And you had a 5-decade alignment in the currencies and the interest rates. Mm-hmm. It's something you rarely see. And what happens when you get an alignment like that is what a market tries to do. This is the first time in, it's well over a 90% probability that the market rejects here and tries to come all the way back. And that's exactly what it did. Now we're kind of going sideways in here. So I look at that, and then I want to get confirmation in the 30-year yield. Now, this channel line was basically a Plaza Accord channel line from 1985. So it just gives you a rough idea of, it's not a perfect channel, but it gives you a rough idea what yields have been doing and how they've been ranging. And now yields have broken back out and they're going higher. But that blue line, that's a 25-year average in interest rates.
Yeah, that's big.
So in my world, my argument's been for the last several months, while everybody is major league bared up, is that you have to honor the technicals. And now the S&Ps are starting to accept normal rates. So I don't think it's the end of the bull market.
Yeah.
The 210 curve, this came down to a huge level. This is life of the 210 curve. So when this just tells you it was way oversold down here and had a rebound. What I'll do is I'll start going back on my time frames from here and try to take a look. You can still see it's way compressed here on the quarterly. It went from, it had a pretty good rally up here and then just stopped again at these multi-decade Fibonacci retracements. And until we start closing, under this area, I think this is going to be more of a range trade. So let me just show you what I'm looking at in the S&Ps. This is a long-term point and figure of the US session. Am I on the right page here? You got can you see the point and figure, Richard?
Yes.
Okay.
This is
Sometimes my screen doesn't light up and tell me where.
active continuation. Yeah, S&P.
Yeah. Okay.
Yeah.
So you can see that where it wants to go on this point and figure is back up here to 47.25-ish. Okay. Now let's just look at it on a US session chart. This is Jackson Hole right here. This was the Powell pivot from 42.2075. We had a 700-point break. Once it came back above this 200-week average, that was the end of it. And you and I had this conversation over here where it was trying to bottom.
Yes.
Now, somewhere up here, it's going to run out of steam, but there's a little left in the spreads. I'm not interested in buying any type of strength, but this is where it wants to go. Whether it comes down first or goes up first, that's where it wants to go right now. So my job as a trader is to try to figure out that path.
And what about the powerful indicator of S&P or spool bonds, right? S&P divided by bonds.
Okay, let's just go to this other page because I've got them all up.
Does that indicator line up as well?
Well, here. So if I just pull up NASDAQ bonds, this isn't done.
Yeah.
It can go another 2,000 points on the NASDAQ.
Okay, yeah.
So I'm, when this broke out on the quarterly and was putting in an outside reversal higher quarter, the first quarter of the year, and everybody was bearish.
Yeah.
The one thing I know in all the years I spent with Ira, you never fade this ever. As simple as it might seem, you just don't fade it. This is a US session in S&P bonds. This still has higher targets. That's another 100 points in the S&Ps to get to that line. And that is going to take you up to, taking you up towards the 4,700 level in the S&Ps. So presently, there's no topping pattern. There's only areas where you just run out of momentum and it backs off for a couple of days. And you can see here, even today, the way it started out, it still put in a powerful bullish day, even though the bonds led most of this. It doesn't matter which one leads. As long as that's going up, you can't sell weakness in the S&Ps.
And once it gets up to that 47.25, if it bounces.
Oh, I think you get short up there for a big trade.
For a big trade.
Yeah, I think you get 100, 200 points off it.
Wow.
And that might not be a lot for, the long-term bulls to do much with because they're going to stay invested.
And would there necessarily be a dichotomy between US S&P versus like other markets, Mexico or Singapore, other Europe? Yeah.
Yeah, I mean, I always line them up. Always. This is the same thing when the last conversation I think we had, we were talking about Mexico and Brazil, and I said once they broke out, once the U.S. indices got above the Jackson Hole Powell pivot, everything's going to go.
Yeah.
And that's what happened. So this is a quarterly in Mexico. I still like it, and it actually trades better. It's a little pricey here, but you can see it's kind of just going sideways and burning off some of its overbought condition. But if you go to a daily, it's just going sideways, preparing for another move. So you just have to be patient and try to buy breaks. And what everybody loses sight of is that everything's trading off Nvidia and has been for weeks. Here, where is that? Where's that Wednesday? Yeah, right there, earnings. There's another one at 190. This earnings right there on a Wednesday in February. We discussed in the room that we wanted to buy it in the 190s, and it just took off and just kept going. And then there's another Wednesday low, and boom.
Yeah.
What it's trying to do right now is that it was way overdone up here, and everything is following Nvidia. So when you're looking at the NASDAQ and how the S&P's traded, all trades off of this. The first time we didn't come down and clean up the chart and a rally. Today we came down and missed trading that by $1, and Nvidia bounced $10 and rinsed all the shorts in the indices again. Now, I think that we're gonna trade that at some point this week. And if Nvidia starts getting below 435 and can close below there, then you can have a good break. But until then, it's not something I want to be short.
Yeah. So a more definitive move down, would that align with the S&P 500 at 47.25 or so?
No, if this goes down, hold on a second. Let me give you a little bit better look on this. What I'd like to do, you see this 100 by 3-point figure right here in the S&Ps?
Yes.
If you can get a break in Nvidia, then you can get a 45.25 print in the S&Ps, which will relieve this direction, and then it can set up for another move.
Okay.
You see, you've already got it on the shorter time frame, but it hasn't done it on the longer time frame. And the one that has done it is the NASDAQ. And the whole room caught this last Wednesday, Thursday. And Friday again, it went back up to the magic number and broke.
Mm-hmm.
And that was another 250-point day trade. So this, I use these to confirm the longer term bar charts.
Yeah.
And then
go ahead. Sorry.
Go ahead. No, go ahead.
Yeah. No, I was gonna move into the currencies, but if you wanted to.
No, go ahead. No, we can do that.
Yeah. Just in the currencies, how are they aligning up with all this view? I think you mentioned earlier before we started the euro, yuan, cross exchange rate, euro, Mexican peso.
Well, this is, so these are the ones that are starting to get interesting to me. Because the euro is losing ground to the yuan and to the peso. And, the narrative on Wall Street is that the dollar's going to zero. I don't know where these guys come up with their analysis, but it's, as soon as they said that, the dollar reversed and went big.
Yep.
So
Right.
I'm just kind of watching this to see if that's going to be, see how that plays out. It's really overdone on a weekly. And if it starts rolling over on the monthly, it can come back a little bit. And you can see on a semi-annual, it went right up into resistance. And when you're looking at this stuff, you want to ignore all of this. You're only looking at 94 forward, because that's NAFTA. And that was the yuan devaluation. So this is the part of the chart that you look at. Euromax, the EWW and the Mexican peso, when the peso's up, our stock market is generally a risk on indicator. So those are the little things that I kind of look at. And right now, this line on a daily is momentum. And if it starts back up, then the peso will weaken a little bit. The stocks will correct a little bit. We'll see what happens with the euro.
Yeah.
So what I like to do, and what most people don't do, is then go out and take a look at the longer time frames and see what they look like in relationship to the short-term time frames. And here you can see that the peso bottomed in 3 years ago against the euro. And now we're at, a big inflection point again on the annual. So either it comes down to here, which is a pretty big move, or it stalls and excuse me, and we come. What I presume is that the indices probably sell off a little bit, and this will correct. But
does the Brazilian real currency also show similar patterns as the Mexican peso?
Yeah, so let's see. So here's this, since you're in Singapore, there's the Singapore yuan, long Sing, and you can see where this topped out last week. And I put that chart out, and then you got another negative pattern yesterday, but now it's coming down into all its short-term averages. And there's room for this to correct. I mean, look at it on the monthly. It's been straight up. The quarterly's overbought. And here too, you're measuring things from 94 in the yuan. So that's not the right spot. The right spot to look at everything at is right here. 54.13. This is going to be the closing pivot here going forward.
Okay.
It's got to stay above here to keep going, or it rolls back down and corrects. Right now, if you go to look at a short-term chart, it went above this on a weekly, and now we're back below again. So if somebody shows you a chart and it's a weekly or a daily, and they don't go all the way out and come back again, they're probably missing half the picture. Let me see, where's the peso? And there's the peso on itself on a daily. And this is trying to strengthen into its, its 200 month. And, as long as it doesn't get back under 1736, it's going to be okay. No, well, how about I click on the right button? And you look at a semi-annual, it's still in a, it still is in a strengthening phase. You go to an annual, it's in a decision zone. So there's EWW. The target, wanted to come back up. It wants to come back up in here again. Almost another 10%. But when you start dialing it back on the shorter time frames, this is getting a little pricey with everything else. So now it's just kind of going sideways, relieving pressure.
And any new trends that you see in the last couple trading days, especially given the announcement of the canal, the new canal in China. I think there was a geopolitical event in the Crimea right on wheat. If we can look at commodities,
well,
like copper, maybe there's cross rates, copper, gold,
sure,
copper.
we can look at all of
that. Yeah.
We had the rally up on ending the grain deal, and then we had a good break, and now we're right back up and going again. So hold on, I got one active. All right. So that's a 2-year average in the wheat.
Mm-hmm.
And it's starting to go again. And this is the Kansas City wheat, which is a similar to the
Ukraine. Yeah.
And there's, all it has to do is really start up and it'll go again. I mean, here, take a look at the Board of Trade wheat actually stopped at a perfect spot here. It just came all the way down and, hit this monthly cloud support and big moving averages. And now it's going the other way. This is that's a 400 week moving average. Here we're just, it looks, well, you got to be really patient for the breaks. If it broke 40 cents, it's worth a shot at buying it.
Yeah.
I don't like chasing stuff. That doesn't mean it can't go to, $8 here in a hurry, and that's not that far away. So you go to a semi-annual, you get a totally different look at what's going on. What's that? Yeah, it might go another $1. But there are a lot of places in between it's going to stop. And, I agree that you want to be long the grains because, now it's the Midwest turn. And we're starting to really heat up. And we're going to be close to 100 for a week here in the Midwest. Yeah. So things are going to dry out. It'll get interesting. The laggard is corn.
Yeah.
And rice took off too. This is a great low in corn, a couple of weeks ago. Anytime you see a pattern like this, you're on alert to see if it's real, especially at the bottom of a move. You don't have to take them initially, but you want to pay attention to see if it's real. And when you go back to a daily, mid-July, just after deliveries, it took off. So after they got rid of all the shorts going into the old crop, then the new crop picked up.
Yeah. And rice being driven a lot by the fundamentals, right? With India banning exports of rice, I think they just announced it.
And this is a big. This is a.
Rice, yeah.
Yeah. See the June. This was the June deliveries in rice. And this is a September contract.
Yeah.
So it can come all the way back up.
Yeah.
I'm not going to tell you the exact path, but eventually it should resolve itself to the upside.
And copper.
Copper itself isn't that interesting, but it's gold against copper. So the gold failed against copper on today.
Okay.
And the copper itself had a bullish day back up to its 200-day moving average. I just think this is a lot of back and forth.
Mm.
And the numbers, I just think it's a number to number trade off of the levels on my sheet. And
Yeah.
I'm not reading a lot more into it. What I did see was that, last Wednesday, all the copper names took off when we were going to risk off. So I didn't think much of it. But today again, it's BHP. Every time the S&Ps rally, then you're going to get to, the copper responding. I don't think it's going anywhere just yet, but I think a lot of the miners, I think it was all a reaction to that China news.
Yeah. And the let's see, any other like oil, nat gas? Do you have charts on?
Yeah,
the
oil.
energy?
I think.
Yeah.
I have room. You want to buy oil, back below $77 again if you get a shot with a pretty tight stop. When you look at it, you're looking at it wants to go to 80.50 and then higher. So I just think this is a big range trade. In this particular chart, for people that do Fibonacci work, they should make sure they're doing the correct Fibonacci work. If I put up an active monthly, $6, it shows a $6.50 low, which is, that's the low deliverable rate, okay? But if I go to an active, a daily continuation, and look at it, you see the negative oil print. When we went negative $40, that's a real, that's a real chart. So you have to figure out which one you want to follow. This one tells me I'm not looking for you're up close to momentum on a monthly, and you don't really want to chase it here. You go to a quarterly, or a semi-annual, maybe it comes up a little bit again. But you definitely don't want to buy strength in this. And if you go to an active continuation, you're going to get a different look. And you're going to come to a different conclusion. So, You have to know which path you want to follow, Richard.
And did you want to look at some individual names?
Sure.
Again, no recommendation here, just doing informational research.
Sure. I think I just lost a bunch of those charts, but let me have them here. Let me look at them. The one I really like was this German.
Sorry, which one? Siemens or
No, this Judd.
oh, Gerdau, yeah, Gerdau, yeah.
However you say it.
Yeah.
What I found interesting about this was that when I looked at a quarterly chart,
Yeah.
this is just starting to come off the bottom.
Okay, yeah.
That's what I like.
Yeah.
You have known risk here where you're risking, where you have to risk through the low, but where you're wrong.
Yeah.
So then you have to get into a shorter time frame, see if it can go. And it looks like it wants to go back to about $7.50 for a start.
And what did it make it up to back in 2010 or something? 30?
Yeah, that high was 1713. So there are.
Okay.
I mean, you can
do
the life of this swing from the 08 crash, and if this thing's really good, it goes back to $10.50.
Yeah.
And the other one, well, it would help if I use the right keyboard, right? There.
Yeah, we're looking at YPF, yeah. From
Oh boy.
Argentina.
I mean, we should have been watching this thing because this has not been on my radar. I'm putting my stock screeners. You see it when it bottomed in 2012.
Yeah.
Monster rally off that.
Okay.
This one's even better because it didn't even. This one came back and retested for 2 quarters going into 2013 before it took off. Here in this is a year ago, it just bottomed and it's been going up ever since. It's pricey up here because it's running into some momentum resistance. But this is another one. If you get a big enough pullback, you want to get out.
Yeah.
Because the quarterly chart looks great.
Yeah, this is like the Petrobras of Argentina.
And this has finally gotten off its rear.
Yeah, Petrobras.
Here's a couple of bottoming patterns in May. There's another one in June, beginning of June with everything else.
Okay.
And again, you got to buy these when they get hammered. This opened up on its low on I think on a Monday. It's going again. Let me see the longer term chart. You wonder if there's any money left in this company after they stole all of it. I think you have to use, basically a $13 alert on it if you want to be long it. And let's look at
Maybe others, yeah, Schlumberger or Nutrien.
okay, I'll put those up. I just threw up these Japanese banks that you guys have been looking
Oh,
at.
yeah, Japanese banks, yeah.
Sumitomo. You know, it's hard to do anything when it's poked out this high.
Mm.
So you gotta wait for another break. To where I'm not sure, but I don't think, you know, if you get a 50-cent break in this. Right.
Yeah.
You know, probably down in the here.
That's it.
Let's look at Mitsubishi. Yeah. I mean, let's see what. So, and this is the same thing. You have to wait because I was looking at this 2018 high at 811.
Okay.
And every time it squeezes up there, gets close, it backs off. So, you know, he's not, he said he wasn't going to really do much with it until he started seeing closes over that.
I see.
And thought that would be the signal for it to go to. What else would you like to look at?
Is Nutrien? You have a chart on
Yeah.
Nutrien or
Where is it?
Schlumberger? Yeah.
Yeah, all those items. You know, it looks. See, this put in an interim bottoming pattern beginning of July with everything else. It held mid-July when on the grain rollovers. So this is basically the same pattern as the grains. You know, they all bottomed at the same time and they all went the same way. The chart I found interesting today was Deere. Retesting its all-time high.
Wow.
So this is going to be big because if Deere starts closing over this, it's going to drag everything up. And I mean everything. So what you're looking at when you're looking at a chart like this, if it starts to break out on a weekly basis above 448.30, you know, you can buy it with a tight stop. And if it closes back below it, you're gone.
Yeah.
Because what you don't want, you're not going to sit with it unless it honors the old high and extends. I mean, that's just a way you can try to manage it if you want to get long.
Strategy. Yeah.
The potential on it, just on a short swing, you know, it's going about you know, into the 540s.
Yeah.
So almost another $100. So that, you know, that's just one of those names that you just want to keep an eye on and see if it goes. The industrials have already, you know, taken off as a group.
Yeah.
And it has much higher targets.
Uh-huh.
So the
XLI,
industrials are good as long as they're, well, you're risking 2% in the industrials right now to see if they go. They close back below 107.80, then something else is going on with the board. So I like to, I'm a relationship trader, so I like to match up a lot of these big
Yeah.
cap names with the indices. And when they all line up, you get better trades. Right
Yes.
now, we're in this grinding phase in a lot of markets, and you put a lot of people to sleep. And we could be like this until September. Well, I think the
Right.
end of the week is going to be busy because you have all the central banks meeting, and then after that, it could get quiet again. So
Yeah, that's the big theme. And as you mentioned, follow the data, follow the indicators that you have.
yeah, so I'm just, it's just a board where you have to pick your spots. I mean, this is one of my favorite charts right here. This pound yen, and as pound yen went up, we were totally risk on. And it got up to this semi-annual and quarterly cloud resistance, and since then you've had a 3-cent break on the pounds, and you've had a decent rally in the yen. And when you get a flat line like that, that's just going to be a big magnet for a long time. And you can see the RSI, it was way overbought up here at the top of this on a long-term chart. So, you can get away with picking out which side you want to trade. And, you had an ORL day in the pounds that matched up with the bottom of the quarterly cloud. I like those.
Yeah. Interesting.
Dollar yen, once it went, what do we put up? 137.25 or 30 or 40 or whatever I put out, was the place that you wanted to go the other way in the end.
Mm-hmm.
Now it's gone as far as it needs to go the other way. So they're just trading the crosses back and forth.
Yep.
I'm not reading a lot anymore.
Yeah, no, this is
Oh,
great.
yeah, wait a second. This is what you want to see. So in the yen yuan, the first time up said don't trust it because it went right up to the bottom of the cloud and you didn't know if that was going to be a one-day wonder or not. Came all the way back and retested, and then last Thursday it took off.
Yeah.
So that was yen strength. Show it to you. Do I have it in the here? I got it in the futures, so you can see it this way. That's all. So we try to confirm a lot of this stuff. I mean,
Yeah, no, it's very, very powerful, your approach on the convergence, right, of all the indicators and trends.
I mean, one of my favorite screens is all the relationships between crude, yen, crude and yuan,
Yeah.
rubles, crude net gas. The more of these long copper, short to 30-year, the more of these things that line up.
Yeah. More confirming.
The European debt. Here's soybeans in denominated in yuan, corn denominated in yuan. We're looking for demand. Wheat in yuan still looks, that just looks good. It's just overbought.
Mhm.
Beans in real, it's at resistance. So you have to see where we're looking to see what the market driver is and where the demand's coming out.
Yeah. Oh, this has been fantastic. Yeah, great insight and charts. And if you could bring up back that first slide you have with the contact information,
Sure.
how our listeners and viewers can learn more about your work, Judd.
You can go to whitewavetradingstrategies.com, and there's you can fill in a form. All you have to do is put your name and email, and you get a month free. You can come into my room. You can listen to the conversation when there is one. Some of the conversations, a lot of people aren't even around, because we might start talking late on a Friday and talk about some pretty amazing things.
Yeah, exactly. Yeah, both technical and fundamental, very in-depth discussions. The traders have different perspectives and different approaches.
Yeah, everybody's got a different style in the room. And when the fundamental guys start talking and they're looking for something, I'll try to match it up with a technical setup. And if we don't see it, then, you have to wait for them. You just don't do it. So, Richard, all the podcasts that you and I have been doing, they've just been fabulous.
Thank you. Yeah, thank you very much. We try to get different perspectives from a wide variety of economists and fund managers around the world. That gives us, food for thought.
A lot of great ideas. Every time
we
have a conversation with these people, I just go in and just start going through all my relationship profiles and see if I can see what they're seeing from a technical standpoint.
Yes, exactly. Yeah. Well, great. Awesome. Thank you so much, Judd, for this discussion, this quarterly update. Appreciate it very much.
All right, I'm jealous. I'm going to go eat again.
Yeah, in Singapore. Yeah, okay. Okay. Yeah.
All right. Thanks again.
Yeah, thank you.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.